The economic consequences of COVID-19 have financially crippled households across the continent. Many people have been forced to start the year by seeking loans. In today's episode of Panorama Africa, CGTN's Lindy Mtongana takes a look at rising personal debt and the risky borrowing trends emerging in Kenya and South Africa.
The first month of the year is jokingly called January in South Africa and in January in Kenya, referring to the hunger associated with being broke. But it's hardly a laughing matter. In many cases, the beginning of the year marks the start of a vicious cycle of debt. Nairobi-based debt and money management coach Roy Okonji sees similar patterns at the start of every year.
January is like a consequence of December, so to speak. What happens is that very many people have not nurtured the discipline, the financial discipline needed to handle December just like any other month. And therefore, they tend at that time to forget that January is coming.
A quick drive out of Nairobi, we meet Consolata Bahati Zena, an actress, singer and producer for local TV stations. In 2020, the coronavirus pandemic shut down the creative industry, forcing Bahati to find another way to sustain her family. Together with her husband, she now offers training in music and video production.
All my programs which are being aired on KTN, they all stopped at once, so I had to come up with this idea. I thought I should just put a studio here, since in Uviru there is no studio. And also I thought of coming up with a tuition stroke internship.
But with only a few students, taking out a loan seemed like the next best option.
Because life was so tough and I needed money for my kids. You know, when they are at home, they eat a lot.
Schools have since reopened and parents, including Bahati, are turning to mobile lenders to keep their children in school.
So I borrowed yesterday and I had to, because of my kid. I didn't want her to lack peace while in school, and she's completing her course, Form 4. So I had to do that.
And while business is slow, Consolata hopes to be able to pay back the loan.
Apply loan. I believe I will pay. I can't promise because time is tough. Life is tough nowadays, but I just have faith I will pay it.
Since the launch of the mobile banking service M-Pesa in 2007, Kenya has witnessed a boom in digital lending, enabled by the widespread use of mobile phones and few regulatory barriers.
Just a quick search on an app store reveals well over 60 options for digital lenders, all of whom offer quick and convenient loans.
Fintech, or the financial technology that has come in Kenya, that is increasing a lot, or a lot of apps have come up where people can easily borrow. And actually most of the microfinance or even Shylocks are also moving to apps because it's easier, and they can also be able to sell to a big clientele, or they can be able to reach out to a wider clientele.
We're trying to fight against some of the obstacles that consumers usually face. That means things like needing to go to physical location to request credit, the need to provide collateral in order to access that credit, the time wasted between applying for the credit and receiving it or not receiving it, and other forms of prejudice.
Dear customer, did you know that you can grow your loan limit
But there are downsides, like incessant mobile marketing, encouraging one to borrow more, and interest rates as high as 45% a month.
30 days and watch your loan limit grow. They encourage you to take loans. When you take long to apply for their loans, they think that they have lost their customers. So, that's just encouraging us to apply for more and more loans.
People get to a point where they begin to look at them as saviors without caring and thinking about the end effect of the same, because the truth is that they are very costly compared to mainstream loans. They are very costly, and they come with a lot of pressure at the time of payment.
The questionable practices of some mobile lenders are not only associated with getting more people to borrow increasingly larger amounts of money, but also with ensuring those borrowers pay that money back. Some loan apps have been known to gather the personal data of their customers and then use that information to bully and shame them in the event of defaulting.
we have seen some organizations, as you said, during the loan collection process, essentially sending out messages to borrowers' entire phone book, trying to make their friends and family debt collectors. We as Tala and other members of the Digital Lenders Association in Kenya, we strongly are against and criticize such moves.
Despite the condemnation, mobile lenders do not need even so much as a license to operate. Anyone can start a lending app with just about whatever interest rates or terms and conditions they choose.
So the truth of the matter is, at least here in Kenya, currently, I'd say the sector is not externally regulated. We're a lot closer to self-regulation. So that's why we're currently in discussions with legislators and regulators in Kenya on creating more formal regulation that will seek to improve consumer protection without necessarily killing the nascent industry.
It may be some time before regulators and policymakers catch up with trends in the digital lending space. Until then, best be careful who you borrow from.
Let's take a look at the situation in South Africa now. Long before the country reported its first cases of the coronavirus, there were already concerns about the unsustainable borrowing culture of the country's middle class.
With net income falling by around 20%, many high and middle-class South Africans have been resorting to unsecured loans.
So personal loans have increased a lot, as well as payday loans, and also credit cards, whereby, as I'm speaking to you right now, most of the credit cards, they have already reached their maximum, so they cannot even be able to access them anymore.
South Africans are among the most indebted individuals on the continent, with 26.9 million people owing over $130 billion. A closer look at these figures reveals a worrying scenario. 42% of credit-active consumers are struggling to pay their debt. South African consumers spend $6 of every 10 they earn on paying back loans. 12 million people have bad debt, meaning they've missed 3 or 4 monthly repayments. Those with bad debt have an average of 6 loans each. The COVID-19 pandemic has only made matters worse. South Africans have faced some of the world's toughest lockdown restrictions. The effect on the economy has been devastating. Pay cuts, job losses and business closures have left the pockets of millions empty.
Consumers are borrowing in order for them to survive, not just to buy luxury things, just to survive, because most of them have lost employment, or maybe one household member is no longer working. Now they are relying on one income.
With infections on the rise, it's clear that this pandemic will continue to shape borrowing trends in South Africa and Kenya in 2021.
2021, it's not going to be easy. 2021 is also going to be difficult, because if the pandemic is still there, if you're not working, or maybe if your income has been cut, it's going to be very, very difficult for consumers to be where they are. It's going to take them time. It's going to take them months or years to be able to go back to where they have been before.
As much as they anticipated growth this year, but that is going to take time, because before an economic turnaround happens, that is going to take more than 6 months. So meaning that the purchasing power of a common Kenyan is still going to be very low, and people are still going to borrow.
From every borrower's perspective, the reason for borrowing is always good. Because to them, at the point of borrowing, they're pressed. So borrowing looks like a solution. But then we have to differentiate good and bad debt from an impact perspective. Good debt is that debt that leaves you better than it found you in the long run.
The full effect of COVID-19 on Africa's economies remains to be seen. But what is clear is that Africans will continue interacting with lenders, and debts may indeed pile up during this year. But it would be wise to heed the advice of the experts. If you must borrow, do so wisely.